morning, and thank you for joining our Singapore Fintech Festival exclusive webinar, where we're going to take a look at fintech trends and developments in Southeast Asia. My name is Anna, and I will be your moderator today. Our presenters are going to be my colleagues Celeste and Sampath Nariyanuri, who are fintech research analysts at S&P Global Market Intelligence, based in Singapore and India. I'm going to pass over to them in just a moment so they can take you through the presentation. But before I do, I want to cover a few housekeeping points. If you have any questions during the webinar, please use the chat function. Our presenters will answer these during the Q&A portion at the end of the webinar. Also, just a quick note that this webinar is being recorded and an on-demand version will be available afterwards. And with that, I'd like to pass it over to Celeste.
Right, thank you, Anna. So our presentation today will touch on fintech funding trends in APAC, payment trends and virtual banking developments in Southeast Asia, and we will then cap the session with a Q&A segment. So let me start off by sharing some of the key findings from fintech investment trends. So firstly, we observed that the pandemic has taken a toll on fintech investments in the APAC region. So over the first 3 quarters of this year, fintechs in APAC have raised a combined 3.9 billion, which is down by 46% as compared to the same period last year. Now, last year's figures might have been somewhat inflated by JD Digits' 1.9 billion round in the first quarter, but discounting this round, fintech investments would still be down by 26.1%. So we've also seen reduced fintech funding activity. The number of fundraising rounds by fintechs in APAC has fallen by 20.5% to 318 transactions over the first 3 quarters this year. Now, from a geographical perspective, fintech funding activity in APAC has mostly been led by either China or India in the past, but this year, we noticed that investors appear to be shifting their attention towards Southeast Asia, perhaps as a way to diversify their portfolio as China faces geopolitical tensions and India clamps down on foreign investments. So over the first 3 quarters this year, Southeast Asia has been seeing a steady increase in the number of fintech fundraising rounds, whereas China and India have both seen declines in fintech funding activities. So likewise, in terms of the trend in aggregate fintech funding value, it also supports the observation that investors are increasingly shifting their focus to Southeast Asia. So the chart on the left shows Southeast Asia's contribution to APAC's fintech investments. And what we can see is in the second and third quarter this year, Southeast Asia's contribution to APAC's fintech investments had actually risen above the preceding quarters. But we should also note that this figure is understated because it does not capture funding raised by ride-hailing apps Grab and Gojek. So both companies have expanded into the fintech sector and are essentially attracting the bulk of venture capital in the region. Based on disclosed funding rounds, Grab and Gojek have raised around 6 billion in total between January last year and September this year. And this is actually more than twice the cumulative amount raised by fintechs in Southeast Asia over the same period. Now, breaking down the fintech funding by sector level, fintech investments in APAC have generally been led by payment companies and digital lenders. So last year, some of the market leaders have seen mega funding rounds. For example, JD Digits, which is a China-based digital lender, drew in 1.9 billion in a Series B round in January, while Paytm, which is an India-based mobile payment app, raised 1.7 billion over 2 rounds in the fourth quarter last year. So this year, we have not seen any mega funding rounds, but payment companies and digital lenders are still leading fintech funding, at least in the first half of the year. But amid the pandemic, funding activity in payment companies appear to be more resilient as COVID-19 has accelerated a shift towards cashless payments, which my colleague will share more about in the later part of the presentation. Now, on the other hand, digital lenders saw a noticeable drop in funding deal counts in the third quarter. And one possible reason for that could be that digital lenders have not undergone a full credit cycle. So investor sentiment might have been impacted by the uncertainty over how these online lenders will perform in this pandemic. So earlier we saw that overall fintech investments in APAC has fallen this year over the first 3 quarters. but there are some early indicators suggesting that perhaps a recovery might be underway. So the current slide breaks down the APEC fintech funding by months, and it seems that fintech investments have hit a trough in June, and both aggregate funding value and volume have since risen, which potentially suggests a return of investors' appetite. And furthermore, recent news on the development and distribution of the COVID-19 vaccine may also spur investors' interest in the coming months. Now, as we look back on the larger fintech investments that took place this year, a few key observations stood out to us. So firstly, even though COVID-19 has created a lot of uncertainty, investors still remain open to new opportunities. So over the first 3 quarters this year, there were 23 large fintech funding rounds in APEC with a transaction size of 50 million and above. And of these 23 rounds, 15 of them, as shown on the screen, still saw participation from new investors. Next, we also noted that investors still seem willing to fund early-stage fintechs, which may have yet to show profits. So about 2/3 of the transactions on the screen are actually in Series B rounds or prior. The other observation that we saw is that nearly half of these large transactions with new investors actually took place in the third quarter, which is perhaps another promising sign that the funding environment for private fintechs in APEC is en route to recovery. And lastly, investors' interest in new opportunities is most notable in the payments subsector, which is perhaps unsurprising since payment companies are less affected in the pandemic. And on this note, my colleague Sampath will now take you through some of the key payment trends in the Southeast Asia. Over to you, Sampath.
Thanks, Celeste. Good morning, everyone. Thanks for joining this webinar. As Celeste pointed out, the payment space has been a magnet for investor capital, and there is a good reason for that. Payments is really the foundational stage of the fintech evolution. Across the region, cashless payments are growing at breakneck speed. One way to determine whether or not a country offers growth potential for fintechs is to see what type of cashless payment methods are becoming popular. We have identified 3 payments models in the region. The first one is the traditional card model, which comprises debit and credit cards. Customers are typically logged into sticky credit card schemes, which are funded by fees charged on merchants. The second one is interbank transfers, which are increasingly catching on in Southeast Asia. Customers can move money instantly between bank accounts using their mobile phones. The first 2 models are basically run by banks, but the third one, which is the electronic money framework, offers opportunities for non-banks to cut out the traditional incumbents. Non-banks in Southeast Asia typically use the e-money framework to offer prepaid cards and reloadable mobile wallets. So we think e-money payments are a good proxy for fintech payments. Flows between e-money accounts do not pass through banks. They will depend on card schemes or the banking infrastructure to draw funds into e-money accounts. With that introduction to the payments framework, let's now take a look at where large countries in Southeast Asia stand in terms of cashless payment adoption. Unsurprisingly, Singapore has the highest cashless usage levels in the region on a per capita basis. For large purchases in organized stores and e-commerce, people frequently use their credit and debit cards. For small, everyday transactions, e-money instruments such as prepaid cards and wallets are more frequently used. Singapore's Pay Now, which is an interbank transfer service, is increasingly being used in transfers. The cashless journey for Singapore, Malaysia, and Indonesia will involve growing all 3 kinds of cashless payments. But for Indonesia, where cashless usage is the lowest on a per capita basis, the only functioning payment instrument is really e-money. So fintechs in Indonesia will have to do the heavy lifting in terms of persuading consumers and merchants to adopt cashless payments in the country. Let's take a quick look at growth rates in cashless payments. Singapore and Thailand have had the best record in payments and reducing demand for cash from 2016 to 2019. Interestingly, ATM withdrawals are also declining in these 2 countries as the cashless instruments are becoming popular. One explanation is is that in both countries, all three payments frameworks are pretty robust. So banks are promoting cards, interbank transactions through mobile banking apps, whereas non-banks are promoting e-wallet usage. Indonesia, on the other hand, has had a rather lukewarm progress in the past 3 years. What is slowing Indonesia's cashless journey is rather a supply side issue. Credit card issuance in the country has been very slow, and therefore card payments are growing at a slow pace. In the next slide, we will review the growth rates of each of the payments models in Southeast Asia. Indonesia, the largest economy in the region, is also the biggest electronic money market, fastest growing e-money market. Because cashless adoption is extremely low, Indonesia will continue to grow fintech payments faster than other countries. Growth rates in card payments are certainly lagging alternative payments across the region. Only Malaysia witnessed double-digit growth rates in the past 3 years. Now moving on to the next slide. Well, this chart actually proves my earlier point that non-banks dominate the e-money space in large Southeast Asian countries. Central banks in the region have responded to the popularity of mobile access to financial services and facilitated the rise of non-bank financial intermediaries. All countries in the region offer electronic money licenses to non-banks, which has basically helped advance the adoption of e-money in the region. That's the reason why we see e-money as a good proxy for tracking fintech payments. Moving on to the next slide. The rise of digital payments in the region also coincides with the consumption of online services such as ride-hailing and e-commerce. Unlike in the US, where payments-focused technology companies like PayPal and Square are becoming gateways to online and offline commerce, payment processing in Southeast Asian region is largely an extension of ride-hailing, e-commerce, and other digital services. This enables large ride-hailers and e-commerce firms in the region function like financial technology companies. Many of them have in fact carved out fintech divisions to deliver financial services to consumers, merchants, and other partners in their ecosystems. Grab, Gojek, Shopee, and Lazada have put in place a payments infrastructure by partnering with banks. Grab, for example, has done this by securing e-money licenses from central banks, and in countries where there are foreign ownership limits, by tying up with local partners to offer payments. For example, Grab has partnered with OVO in Indonesia and K-Bank in Thailand to facilitate payments. Countries with low penetration of credit cards offers opportunities for tech companies like Grab to provide a virtual revolving line of credit. Grab offers co-branded credit cards, pay later, and installment lending products. Let's now talk about the influence of e-commerce on digital payments ecosystem, taking the example of Lazada. Lazada is a regional e-commerce company, and just like its competitor Shopee, Lazada is engaging shoppers and merchants through digital payments and lending to shore up activity on its marketplace. Lazada was perhaps among the first e-commerce companies to issue co-branded credit cards in the region. Co-branded credit cards, pay later products basically allow e-commerce companies to reduce payment processing costs, increase purchases on their activities or on their platforms by reducing the checkout abandonment rates, and also help them earn a share of interest income and fee revenue from issuing bank partners. At the core of Lazada's fintech strategy lies its close relationships with Ant Group or the broader Alibaba ecosystem. So unlike Shopee, which has taken a relatively more hands-on approach by basically securing regulatory licenses, Lazada has a contrasting strategy. Lazada basically works very closely with the Ant Group and its various fintech associates for processing payments. Let's now look at the banking response to the fintech developments. Interbank pipes have made themselves relevant to consumers in a variety of payment scenarios by supporting in-store purchases through QR code payments, salary crediting, government disbursements, of welfare payments and income tax refunds. Instant payment schemes offer convenience and attract zero to little fees. A payer does not have to input a bank account number to make a fund transfers and can instead use a proxy identification such as a mobile number or an email ID. And fintech participation in these schemes is currently limited to facilitating top-ups to electronic money accounts. Moving on to the next slide. Thailand's scheme has so far seen the greatest uptake with consumers in the region. We think the popularity of interbank transfers can slow down the growth of e-money payments, which are really a proxy for fintech payments as we discussed before. In Thailand, Singapore, and Malaysia, banks are better positioned to compete with fintechs in a variety of payment scenarios. Finally, I would like to draw your attention to our soon-to-be published market report about electronic money in Southeast Asia, in which we will discuss the size of the market, recent payment trends, capturing the impact of COVID on payments, identify the leading players, their financial services, and key partnerships across the region. Now, on the question of whether non-banks will really make the transition from distribution of financial services to production, Celeste will talk about the evolving virtual banking framework and how that will bring opportunities for non-banks. Back to you, Celeste.
All right, thank you, Sampath. Right, so virtual banking has been a hot topic of late as several Southeast Asia countries prepare to welcome tech players into the banking sector. Now, in terms of the regulatory development in Southeast Asia, Singapore is perhaps the most advanced, having just announced 4 successful digital bank applicants last week. So Philippines has just published its digital banking framework last month, and it's now accepting applications. So in earlier media interviews, BSP, which is the central bank for Philippines, shared that up to 5 licenses will be issued over a 5-year period. Malaysia is in the final stages of developing the digital banking regulatory regime and will be opening up applications thereafter. For other countries like Vietnam, Thailand, and Indonesia, there seems to be limited development, at least on the regulatory front, but Vietnam and Thailand have explicitly expressed interest in exploring digital banking regulations. Now, in Singapore, there were 5 digital banking licenses up for grabs across 2 types of license, but the MES had only issued 4 licenses in total, 2 per category. So the first category is a digital wholesale bank license, which will enable the bank to serve the small and medium enterprise segment and other non-retail customer segment. So licenses for this category was awarded to Ant Group and a consortium led by Greenland Financial Holdings, which had not publicly disclosed their application previously. So the second type of license is a full digital bank license, which allow both the bank to serve retail as well as non-retail customer segments. So the 2 licenses were awarded to C and Grab's consortium, comprising of Grab and Singtel. So earlier this year, we had actually published an article discussing why C and Grab's consortium would most comfortably meet MES's expectations of a full digital bank as compared to all other disclosed applicants, and central to which it's really their ability to serve the underbanked segment through their various business units, as well as their ability to meet the onerous minimum capital requirement of 1.5 billion. And their regional presence in Southeast Asia also puts them in a good state for this license. So this article is available for download under the resources segment on our microsite. So if you're keen to read more about it, you may download the article from the microsite. Moving on to the rest of the region, as we saw earlier, other Southeast Asia countries are preparing to open up their banking industry, and we think that leading e-wallets are likely to be among the contenders for a virtual banking license. So in some ways, the leading e-wallets are already behaving like a quasi-bank, having already expanded beyond payment services and are now offering a range of financial products such as loans, savings account, insurance, investments, and card offerings. In countries like Indonesia and the Philippines, some of the leading e-wallets have also been used as a channel for the disbursement of the government's COVID-19 relief aid, And this further reinforces the role of e-wallets as a de facto bank to the underserved community. But while e-wallet operators may have an e-money license, they would either have to acquire additional licenses or to rely on external partnerships to expand their range of financial services. And sometimes the partnership terms may limit the e-wallet's ability to retain and drive customer engagement. So, for example, Gcash in the Philippines has teamed up with CIMB Philippines to allow users to apply for a basic savings account via the Gcash app. But if users are keen in depositing amounts greater than 100,000 Philippines pesos, which is roughly 2,100 USD, or to extend validity of their savings account beyond 12 months, the users will be redirected to the CIMB mobile banking app. So this is a condition that might potentially undermine Gcash's ownership of their customer relationship. So in this case, a banking license is advantageous because it can help to reduce the e-wallet's dependency on external partners, and at the same time, improve capital efficiency and provide greater revenue opportunities. So, for example, with a banking license, the e-wallets would be able to gather deposits, which could then serve as a low-cost funding source for loan products, which will in turn then improve the margins on their credit solutions. But of course, having said that, the downside of having a banking license is that it also comes with greater regulatory scrutiny. So we think that e-wallets with banking ties would perhaps be less likely to bid for a license. So for example, Touch and Go e-wallet in Malaysia is a subsidiary of CIMB, while Indonesia's Link Adjust stakeholders include a consortium of banks. So for these e-wallets, they can perhaps depend on their parent company to provide other financial services. And another example is Line in Thailand. So the situation is a little bit different because Line is not owned by any bank, but it has established a joint venture with Kasikorn Bank to launch financial services on Line's messaging app. So with the backing of the institution, Line can essentially offer banking services without the need for a separate license. But of course, as exciting as the impending entrance of virtual banks may be, it is also important to recognize that incumbent banks have already had a head start in the digital banking race. So large regional banks have already launched digital-only outfits as early in the region as early as 2016, perhaps as a means to penetrate new markets or to deepen their penetration in markets where they have much smaller presence. But having said that, we also observe that the innovations of these traditional banks appear to benefit mainly the residents living in the urban areas with limited reach in the rural communities. So, for example, for some banks like DBS Digibank in Indonesia, the account opening process cannot be completed remotely because of certain identity verification requirements. So this often requires users to meet up with an agent or to visit designated verification venues, which are primarily located in the major cities. So what this means is that despite the digital banking efforts by the incumbents, there remains a gap for the underserved or underbanked communities in these countries, which is an area where the virtual banks may potentially be able to fill. And with that, we have come to the end of our presentation. If you're keen in a more in-depth discussion on the topics that we have covered today, you may refer to our articles, which are available for download under the resources section of our microsite. So I'll now hand over the time to Anna, who will facilitate the Q&A segment.
Thank you very much, Celeste and Sampath. That was great. So yeah, let's take some questions now. And the first question that we have is, on the fintech investments, investors seem to be turning their attention towards Southeast Asia. Where is the money going into in Southeast Asia?
Right, I can take that question. So in line with the broader sector trends, payment companies in Southeast Asia are drawing in the bulk of investor capital and for good reasons. So apart from Singapore, cashless payment adoption levels are low in Southeast Asia, which means that there is a lot of room for growth in this sector. So what we have seen is that e-wallets and payment gateways that support online payments in particular have generally seen larger funding rounds this year.
Great, thank you very much. The next question we have is, Could you share more about the presence of Ant and Tencent in Southeast Asia?
Yeah, I can take that question. So both Ant and Tencent have a growing presence in the Southeast Asian region, and as payment fintechs, they're rather performing a limited role of serving Chinese tourists in the region. Although Ant has, in recent times, certainly expressed a much bigger ambition by applying for a wholesale digital banking license and getting one in Singapore. But it is really as strategic investors and partners, the two Chinese companies greatly influence the region. And our research reports show that Southeast Asia is one of the fast growing fintech hubs with growing capital needs. It is also a region where we are seeing companies across businesses coming together and building mini ecosystems. In Indonesia, there is Linkaja, a digital wallet owned by telecom and banks, all of which are state-owned enterprises. OVO, which has close ties with ride-hailing company Grab and e-commerce company Tokopedia, and either owns or holds a minority stake in TrueMoney in Thailand, Dana and Akulaku in Indonesia, eMonkey in Vietnam, and Gcash in the Philippines. And Ant's affiliate Alibaba owns Lazada, the popular e-commerce platform in the region. So what we are increasingly seeing is that fintechs and other digital platforms are coming together. And being part of a growing ecosystem is essential for a fintech. These partnerships are often beneficial, mutually beneficial, and the whole is greater than the sum of the parts. The two Chinese companies bring to the table not just their vast financial resources, but also a path to leverage their growing digital ecosystems in the region, not to mention their expertise as mobile wallets that made the super app strategy work. Hope that helps.
That's great. Thank you very much. So the next question we have is, do you see more strategic investors or financial sponsors in payment companies?
Right, I can take that question. So generally, it tends to be a mix of both strategic investors and financial sponsors participating in funding rounds. And it really varies because there are many factors at play. So for example, it depends on the fintech's growth plans. It also depends on the kind of support that the fintech is seeking. And sometimes it is also subjected to the requirements or restrictions of their existing investors. But in general, we find that those looking to expand in overseas markets tend to be more inclined to work with strategic investors. So, for example, Grab has taken on a number of strategic investors such as Kasikorn Bank and Krungsri Bank to basically support the expansion of its fintech business in the Thai market. Yeah, hope that helps.
Thank you very much. So the next question we have is, what are some policy trends in the market for e-commerce or e-wallets, especially in Indonesia and Thailand?
Yeah, I can take that question. So regulators in the region are actively pursuing policies to expand the reach of cashless payments. Some countries like Thailand, Singapore, and Malaysia have built centralized interbank schemes that allow consumers to move money instantly between bank accounts using their mobile banking apps. And by supporting QR codes, interbank transfers have gained a foothold in the merchant ecosystem as well. Instant payments could become popular as they reduce working capital needs and reduce transaction costs for small merchants. Policymakers in several countries are creating regulatory frameworks to promote interlinks between banks and non-banks through the use of application programming interfaces. And regulators are also nudging the payments ecosystem to adopt standardized QR codes to promote interoperability. Still, universal bank account ownership remains a very important pillar for sustainable growth in cashless payments. For example, the explosion of fintech payments in China coincided with large-scale issuance of bank cards. Inadequate level of bank accounts and card ownership in Indonesia and the Philippines are compelling fintechs to create surrogate banking infrastructure to facilitate cash-ins and cash-outs.
Thank you very much. So I think we have one final question. which is, could you share more about the competition among the e-money issuers in Indonesia?
Yeah, sure. I can take that question as well. So the e-money landscape in Indonesia is rapidly changing with the proliferation of smartphones, feature-rich apps offered by non-banks and their cashback reward programs, or propelling the growth of e-money payments facilitated by non-banks. And what we have noticed is that affiliation with high frequency consumer platforms like ride hailing, e-commerce, and other on-demand services separates the leading e-money issuers from the rest. Now, all these companies are also increasingly expanding into adjacent financial services like lending, insurance, and wealth management. So in our upcoming electronic money market report, we are basically predicting that non-banks surpassed banks in electronic money transactions. And we're also highlighting the business models of leading electronic money players in our report, which will be published later this month.
Great, thank you very much. So that's all the questions that we had, and we've covered a lot today. So if you have any follow-up questions, please contact either myself, Celeste, Sampath, or any of our colleagues at the festival. For those who want to review anything we've been through today, this presentation has been recorded, and I will send a copy of the presentation and the recording later in the week. So I just want to end it by saying thank you again, Celeste and Sampath, for presenting. Thank you everyone for taking the time to attend the session today, and we look forward to you joining us again soon.